Welcome in, folks. Got a bunch of stocks to talk about here at the front of this video. I got many stocks to discuss. Some I own, some I don't own, some I see as incredible opportunities to make lots of money here over the next bit of time. Some I think are a little bit of worry spots. So we're going to just do a bunch of stock talk at the front of this video. After we're done that, I want to react to these three key videos here. This first one, this one's actually from less than an hour ago. Nvidia, here's why Raymond James reiterates its strong buy. I believe they have it's either a 170 or 190 price target on Nvidia, so looking forward to reacting to that one. Then I want to get in this one, altimeter Brad Gerstner. He's speaking about Nvidia and a few other stocks in this video. Looking forward to reacting to that one. And then I want to get into this one in which he's talking about he's selling Uber. And Uber is a stock that's very controversial right now because it looks like, dang, like Uber is a buy here, right? But on the flip side, other people are thinking like Tesla is a threat. You know, autonomous vehicles, is that a threat to Uber? Those sorts of things. So I thought this is a really interesting stock to discuss in this one here today. So appreciate y'all joining me as always. One thing only I need from you guys, and it's to smash that like button, hit that like button, make it glow. I appreciate y'all for being here as always. Additionally, thank you for being subscribed to the channel, okay? If you haven't heard, we got a massive one-day sale coming up in just over a week from now, November 29th. Black Friday will be the deal for 1000xstocks.com. Full access. That will be pinned comment down there. You can fill out a form there. Basically, it's just your name and your email. If you want, you can put down your number. You might want it text over because remember, Black Friday, the day that deal drops, right? Your inbox is going to be flooded with like 85 billion emails from like every company that possibly has your email address, right, on that particular day. So the moral of the story is if you just want to put your email, fine. But if you want to make sure you don't miss the deal, because it's one day and one day only. And when that deal's over, it's over. So if you're really serious about making sure you get the deal, I would put in your number so you can have it text over as well, okay? All right, guys, so let's go ahead and let's do some stock talk here. I want to start out right at the front of this video talking about the stock that's up 377% now at this point in time, which is Honest stock. An absolutely run for the ages, right? A run for the ages, and man, I love this stock. I love this stock so much. And the reason I love this stock so much is just the turnaround has been so phenomenal, right? Like the revenue, the margins, the profitability, and it doesn't really show any signs of ending anytime soon. It looks like now, 2025 at least, it looks like 2025 calendar year, that will just be focused on building that income higher and higher and higher, which is unbelievable, right? We took BK off the table, $50 million plus in cash on this company now at this point in time. Like, wow. Like what a turnaround. This is one of the best turnarounds I've ever seen. Like if Carly and the team keeps turning this around, and next thing you know, this is a $10, $15, $20 stock, this will be one of the best turnarounds I've seen since Lisa Su turned around AMD. Like, that's what we're talking about. Like, this is a historic run. This was $1 stock back in 2023. $1, right? Now we're pushing up close to $8. I wouldn't be surprised if it's $10, $15, not that far in the future. And then if they can start reaching like $10 million plus a quarter in net income, like I think $20 is on the table for Honest, right? So the moral of the story is, I love this stock. It's unbelievable. Like, what a turnaround, man. What a freaking turnaround. Fubo is still lagging. Like, Fubo, I don't know what's going on with Fubo. I'll be honest. I'm amazed that stock's not a lot higher than it is, considering all their financials, all their numbers have turned around. And the stock just seems to get no respect. Like, no respect. So that's one that just baffles me, right? Celsius is a flat-out buy here. Anything under $30 is a gimme. When it pushes down to that $25 level, it's a push me further. A SoFi stock, what a performance! 125 flipping flapjacking percent, unbelievable. And yeah, it's been a fun run to this $15 level. But the crazy thing is, you look on a one-year basis and the stock's up 125%. But look at a 3-month basis. The stock's up 110%. So really, this stock has really gotten almost all the gains really in like the last 2 months, right? Like the last 2 months is really where it's gotten like the far majority of its gains. That's incredible, like incredible move for this stock. But in regards to SoFi, like I spoke about this stock extensively on the reaction channel here, I think it was 2 days ago, I did a video very in-depth. I was like 95% of the video was just talking about SoFi stock. So if you want to hear more in-depth thoughts about SoFi, definitely check out that video because, and once again, that was released here on the reaction channel, Jeremy Lefebvre Makes Money. That was like 2 days ago I did that video. But yeah, what a run it's been. I mean, gosh, these last 2 months have been special, right? Revolve keeps running. Revolve's just a sneaky stock. Like, it doesn't get a lot of talk. You know, SoFi gets a lot of talk. SoFi's big on YouTube. SoFi's big on X, right? No one talks about Revolve other than me. And I don't even talk about that much, right? It's a decent sized position I have in the public account. It's one of 6 stocks I have in the public account that have made over a double up for me, right? But this is a sneaky stock. And if you're wondering, is Revolve an opportunity? The truth is, Revolve might still be an opportunity at this point in time. The balance sheet's incredible at this company, like an A+ balance sheet. The income statement is starting to come around. We're looking at probably a consumer in 2025 that's going to be in a much better spot than 2024 and certainly in 2023. That could bode very well for Revolve. So yeah, I think Revolve's setup for next year is actually pretty darn attractive. So yeah, I mean, Revolve's just a sneaky stock, 139% gain. And who talks about the stock other than me? Like literally, it's such a not covered stock. Nike is a steal deal buy that's in the bottoming process right now, along with Estee Lauder, right, which is EL right here. Look at Elf on a Shelf. Look at Elf on a Shelf. What a comeback. What a comeback. This stock went down to 102 yesterday. 102. And now the stock's 122. Imagine picking this stock up yesterday on that whole Muddy Waters short report, right? At $102, and you just made yourself $20 a share in, a day. Like, that's incredible. Absolutely incredible, right? I spoke about, if you want my in-depth thoughts about the ELF situation, I spoke about that actually last night on the main channel. For those of you guys that don't follow me on the main channel, it's called Financial Education. And I covered a bunch of different subjects. I was covering kind of the Melt Up 2.0 I was talking about in that video, right? In those sorts of things that are, Melt Up 2.0 that's coming. So I spoke about that last night, but I also snuck in the ELF situation in regards to that. So if you're wondering for me to cover that, it was in that particular video, okay? Wynn Resorts slamming buy right now. Buy it, right? PayPal's had a sneaky nice move over this past year, 53%. But the bottom line is with PayPal, it's still a buy. It's still undervalued. The stock should be, the fair value for PayPal right now is, I would put it somewhere around 120. Like if PayPal was 120 right now, I'd say that's fair value. That's where PayPal should be valued, right? 85 is a long way from 120. So this stock is very undervalued still. If the stock was trading like 180, 200, I'd be like, oh, this is kind of getting stretched for PayPal at this point in time, right? Monster hasn't been the best performer, but it is actually a buy right now along with Celsius. It's been a buy. It's not as attractive as a buy as it was down here, but it's still a buy. Meta is stealing money. Like, this stock is an incredible buy. A lot of people are negative on big tech. They're really negative on big tech. And I'm going to be honest with you guys. The more I look at these big tech companies' numbers coming in, the more I'm convinced big tech could have another banger year next year. It could. I went through last night on my melt-up video, I went in depth in regards to valuations, right, on all the Mag 7s. And I showed you the in-depth kind of look at all those 7 of those companies on the main channel last night, right? And it's fascinating because I'm looking at a lot of these stocks, I'm like, damn, they set up freaking good for next year. I think Meta sets up really good for next year. I think Amazon sets up very good for next year. Google McDougal's got a whole bunch of crap going on right now, but they might set up decent for next year. The question with Google is, the Trump administration, they still might let the government come down on Google. So that is something I kind of keep in mind there because Google wasn't necessarily the best friend of Trump during the election cycle, right? So there could be definitely some favorites, played in regards to that whole situation. So that is something to keep in mind. But I think some of the pressure as far as on the government side from the big techs could be alleviated, and the valuations look very attractive on several of those big techs. Not all of them are a great deal, but there's several of them that actually are pretty darn attractive here. So we'll see what big tech does in 2025, but I wouldn't be surprised if it's actually another good year for a lot of these stocks. Like, I really thought Meta would be trading 700 by the end of this year. And it's going to need to make a heck of a run to get there, by the end of this year, because we only got, 5 weeks left in the year, roughly? 5-6 weeks left in this year. So Meta's going to need to make a heck of a run if it's going to get to 700 by year end, which is where I thought it would end at. So the fact that we're still in the 500s, this stock's a buy, right? Palantir's chilling out. You know what's interesting about Palantir? It's holding gains really well. It's holding gains actually very impressive. Considering how parabolic of a move it's had, 210% in the past year, and specifically this move, right? That's a move that was crazy, from $40 to $60. I mean, you would have thought it would have more weakness than what it has. It looks like a lot of investors are just happy, and I'll even look at myself, right? I took some profits. I took 550. I sold 555 shares. What was that, last week or whatever, right? Took a profit, took a little off the table, but I had those 5,000 shares, and I'm kind of okay. Like, if Palantir doesn't go up in any substantial way, like, I'm okay just holding my 5,000 shares in the public account. If it made a move to 70, 75 in the short term, maybe I sell 1,000 or 2,000 Palantir shares, but honestly, I'm okay with just holding 5,000 here if the stock stays around here. And I think there's just a lot of people that are Palantir shareholders are kind of in my same boat. They're like, that's fine. And, the thing with us Palantir shareholders, we're not that scared if it goes down to 40, right? A lot of people are like petrified, like, well, what if Palantir crashes down to $40? Like, dude, we were just at $40 like a month ago. It doesn't scare us. Like, okay, like, oh, we lost some of our gains. Big deal, right? I think a lot of people are more scared of Palantir going to 200 over the next few years than the stock moving down to 40 over the next few months, right? I think that's the moral of the story in regards to Palantir. People are scared that Palantir's growth rates are going to keep accelerating like they've been accelerating, right? Next thing you know, it's going to be 35% revenue growth, 40% revenue growth, 45% revenue growth, right? And stock's just going to keep moving, and the earnings per share growth is going to be far exceeding that. And you're going to be talking about so much of that dollar of revenue that comes in will be making its way down the bottom line. I think a lot of people are petrified of Palantir moves to 200 over the next few years and they're on the sideline, right? Or it moves to 120 over the next few years and they're on the sideline because they sold out, at 60 because they're worried about it going down to 40 and those sorts of things. So, we'll see. And that's one of the reasons I don't want Palantir to keep going up in the short term, because if it keeps going up a bunch in the short term, the stock hits 70, 75, like, the prudent thing to do would be for me to take another 1,000 or 2,000 shares off the table, right? But on the flip side, I really don't want to do that because I don't know where the top is for Palantir's growth rates, right? Like the top might be 32% revenue growth, 35, something like that. It might be in the 40s. I just don't know because it just keeps accelerating. And so that's why even myself, I look at Palantir and I'm like, I just want the stock to chill right now. Please don't do a dang thing, Palantir. Just, you want to just be around $60, $55, I don't care. Chill for a while. I want to see the next quarter numbers. That's what I really want to see. I want to see, like, are we talking about growth rates that are going to keep accelerating? And let's say we have another acceleration next quarter on Palantir with growth rates. Okay. Who's to say the following quarter we don't have another acceleration? And the following quarter, another. So, like, these are things to consider, right? So Cheesecake's a steal deal here. This is another sneaky stock, right? Sneaky stock, 43%, 44% move. That does not include the dividends. Cake is far outperformed the S&P 500 and the QQQ, right? Which is fascinating to think about a restaurant chain. We're still early on this Cake move. Like, Cake, don't be surprised if this is a $150, $200 stock a few years from now. So this is still very, very early days in regards to that. Bitcoin making a huge move, obviously, on the Gary Gensler news. Gary Gensler is going to be stepping down. So not surprised to see Bitcoin making that huge upward move. The Russell's rolling, keep coming back to life. That's something certainly you'll see if we get Melt Up 2.0 here coming. Coinbase, actually, it's funny. Coinbase having a horrible day despite Bitcoin doing amazing today, right? Isn't that fascinating? Very, very fascinating in regards to that. As far as big tech goes, obviously really bad day for Google McDougal here today. Amazon's having a little weakness here today. The problem is a lot of times we get up to that $200 level and then Jeff Bezos sells a bunch of shares to fund his rocket company and all that stuff. So, that's kind of why that stock's had a little bit of trouble in the short term. But I think, no pun intended, I think that stock's ready to blast higher in 2025. We'll see what happens there, right? Uber, we're going to talk about Uber in just a moment, right? Uber is just, Uber's, look at this. It's underperformed the queues. and it's underperformed the S&P 500 over the past year. That's not good. You know, it's not good for Uber. The numbers have been very impressive out of Uber, like the financials, but the stock is just not reflecting it. The fact that that stock has underperformed the Qs and the S&P 500 over the past year is not great. Let's see it on a 5-year basis. On a 5-year basis, it hasn't even beat the Qs. It has beat the S&P 500, right? But it hasn't beat the Qs. You would have been better off over the last 5 years just owning the Qs rather than owning Uber. So interesting in regards to that. Let's see year to date. Dang, year to date, it's underperformed bad. 19% gain versus 25% for S&P 500 and 25% for the Qs. So that's interesting in regards to that. Shop keeps moving up. That stock's just a beast. The company's just a beast. Snowflake having a big bounce back day. I'm not surprised. That one had been beaten down too much. The thing you got to understand about these big tech companies, like if they beat them down enough, though, when you get that pop on the other side, it's ridiculous, man. It's insane because at the end of the day, these sorts of companies, people do want to own them. Like Snowflake, I know it's gotten a lot of hate in the last year. They want to own Snowflake. They want to own Snowflake, right? And that's just what I see with a lot of these stocks that get beaten down, a lot of these big tech stocks. As soon as it gets any positive momentum, oh my gosh, it's just a rocket ship ride in regards to those. Now, we got to check one last thing before we react to these videos, and that's commodities. Very important we take a peek here at GSG. GSG in the past year up 1%. Year to date up 7%, but year to date's not. You usually want to just kind of check it out on one year basis. This is phenomenal. This is phenomenal. That's great. I don't know other way to put it. Like that's great. If you think about inflation, and is inflation an issue over the next 6 to 9 months? We're looking good. WTI, look at this. On a 1 year basis, WTI is down about 10%. Let's freaking go, baby. Let's go. You know, and that's you got the inflation boogeyman's not in the market. So basically the Federal Reserve for at least the next 6 to 9 months, now a year from now, 2 years from now, 3 years from now, it could be totally different. But you got to understand this in regards to the Federal Reserve and how this moves the stock market. The Federal Reserve now has only one issue to worry about for the next 6 to 9 months. One issue and one issue only. And that one issue is the economic realities, right? Unemployment rate, GDP, those sorts of things. It does not have to worry at all, and I mean at all, about inflation for the next 6 to 9 months. Once again, a year from now, 2 years from now, that's all. It could be a whole different ballgame. But the fact is, for this next 6 to 9 month span, this month, November, December, January, February, March, April, into probably May and June, no. Summertime, after summertime, then we can start to ask, like, ooh, maybe they'll have to start worrying about inflation. And so the Fed's not a boogeyman at all. And so that's you know, pretty good for at least a short term, right? And so, you know, but once again, a year from now or 2 years from now, maybe inflation comes roaring back, and then that will be an issue we have to deal with at that particular time. But for the short term, 6 to 9 months, we don't have to worry about that. So that is pretty dang bullish when it comes to that, okay? Alrighty, next one up here. Here's why Raymond James reiterates its strong buy rating on the semiconductor giant.
Selling off here. And Srini, is it even significant given that last time around, I think the shares were down 6-7% on the results, and then they still rallied sharply into this quarter?
Yeah, Kelly, we don't think it's all that significant. First of all, the demand itself is very strong right now. One indication, actually one big positive surprise in the quarter was that if you look at the Hopper demand, you know, the current product that they're shipping in Q3 and also into Q4, you know, that grew 5 billion sequentially. That's the fastest growth in the last 4 quarters. In the last 4 quarters, Hopper growth has averaged about 3.5 billion. And in 3Q, it was 5 billion. And usually what happens is that when there's a new product coming out, there's always this concern about a slowdown in the older products, but we're not seeing that. So that tells me that the underlying demand is very strong. And as you said, you know, supply is the main issue for the inline-ish outlook, and that's something we were expecting. So, you know, we think the demand is going to continue to outpace supply for almost in all of next year. So if anything, you know, as long as the cycle extends, we actually view that as more of a positive. So we're not worried about, you know, a small pullback here.
Srini?
If you want to know why the stock ended green here today, here's why. Here's why the stock ended green. Everybody wants to own Nvidia stock. It's just the bottom line. Like, all these Wall Streeters want to own it. They're all going to have to pile into it at year end to try to catch up to the market, right? And even if you say, okay, this quarter numbers, like they beat, but it wasn't like that crazy a beat, then people just say, well, next quarter it's going to be a big beat. Just wait till next quarter, right? And so that's a game you can play for at least the next 2 to 3 quarters. Now, second half of 2025 into the first half of 2026, I think Nvidia is going to have real questions. And that could be the moment where the stock maybe rallies and then sells off completely. Because I think that's going to be the moment when people start to ask real questions about where growth rates go in the future. And like, not just like concern for concern's sake. Like, it's going to be actual like, oh, like growth rates are significantly slowing. And you'll start to see that in the second half of 2025, but you'll see it much more in the first half of 2026. So that's going to be the moment that people really take a big pause, but that's not right now, right? And people, a lot of these traders in regards to market, they're worried about making money now. They're like, I don't care about a year from now. I don't care about 2 years from now. I want to make money right now. In Nvidia, it's still the play. It's still going to be the play at the end of this year, and it might still be the play at the very beginning of next year, right? And then we can talk about maybe the sentiment changing, quite dramatically in the second half of 2025, but that's not right now. And if you're more of a trader on Wall Street, which a lot of these folks are, right? They're just either day trading or swing trading. It's still the play. And so you just can't really get momentum out of it. And investors look at the numbers and they're phenomenal. I posted the income statement inside the private group's Discord chat. I also posted on X. It's A+. You can't poke any holes in that. It's phenomenal. The guidance is phenomenal. Like, there's nothing yet you can poke at in regards to Nvidia and say that's bad, right? Even the Blackwell chip, oh, maybe it's overheating this and that. Well, they don't really have any direct competition, so it's not like you can just say, oh, forget Blackwell, we're going to go with this other company. It doesn't work like that yet, right? So the moral of the story is, in regards to Nvidia, the stock still sets up well in the short term, but the medium term, you got, I think, a lot of questions, and I think the stock will falter medium term, not short term and not long term. If you're really thinking about the next 5-10 years with Nvidia, you can still be very bullish, right? And if you're really thinking about the next, 5 to 10 months, I think you can still be bullish. If you're thinking 1-2 years out, ooh, that's where I think we have some problems with Nvidia, right? But that's not right now. So that will come in time, folks. That will come in time, right? All right, let's get back into this.
Kind of back out for a second and put this in context, and maybe you can use, what your direct experience throughout your careers as a kind of the witness point. It's so unusual for a semiconductor company to be worth $3.5 trillion. And are we, the valuation is not that rich. They continue to kind of match where they need to be with the market. So it all seems real. But is this sustainable as a part of the U.S. economy? Is it sustainable in terms of the semi cycle? I mean, I would just love your thoughts on the significance of all of this.
Yeah, when you look at the market cap in a vacuum, it does look a little scary, I'll be honest with you. But at the same time, you look at the company's profitability and the valuation, it doesn't look that bad. Historically, this is a stock that traded at about 40 times on average. Right now, it's in the low 30s. So the question is, how long this, AI-related spending will continue. Just listening to their customers, it doesn't look like, we need to worry about a slowdown, at least for the next, 12 months. Of course.
Exactly. 2025, all these companies, and I've been pointing this out for the longest time, all these companies are up in their CapEx budgets, nice amounts again in 2025, right? Meta, Microsoft, OpenAI, Tesla, all these big dogs. Oracle, Amazon, they're all still opening up those pocketbooks. Bigger next year, right? 2026, once again, is a year that you could very well see those companies not necessarily pull back CapEx budgets where they're going like negative, but where the spending slows substantially. Where a lot of these big tech companies maybe say, we're just going to spend 3% more, 5% more, 7% more, 10% more on CapEx than the previous year. That, folks, is when things are going to get really interesting in regards to Nvidia, because then Nvidia might be looking at more 10 to 15% revenue growth rates. And then they're going to have a whole changing of the guard in regards to Nvidia's investor base, from growth investors to then maybe a lot of the value investors will step in and they say, Nvidia stock will probably get beaten down. Like, let's say Nvidia goes to 200. Then growth scare happens, a couple quarters after that, and, stock goes down to 150, where it's kind of trading at right now, 140 or 130. And then value investors are looking at it and they're like, dang, Nvidia's trading at like, let's say, at that particular time, maybe they're at like a 26 forward P or something like that, right? With a great balance sheet, great income statement, and they're still looking at, let's say, 10, 12, 15% revenue growth, let's say, in 2026. And value investors might then step in and say, dang, I got to buy Nvidia as a value investor, right? So stock could still go through that tough time period where it's going to be a changing of the guard, but there's something that could, definitely transpire in regards to that, right?
There's going to be a pause at some point. We don't have visibility as to when that pause is going to be. And the other question we get is that, what's the ROI like on AI? Why are we spending all this, amount, right? So I think, the better way to look at it is that right now the competition is so intense among hyperscalers. That's what's driving it. It's not so much about, ROI. I think the reason is that in tech, there's always one winner, right? If you look at any of the, previous, tech evolutions, there's always one winner. So I think, the competition is going to remain very intense, before we know who the winners are going to be. So that's not going to slow down. So I think it's a little too early to think about ROI from that standpoint.
Yeah, and another thing that's kind of a negative for Nvidia, kind of once again in that 2026, 2027 timeframe, is AMD is going to become a much bigger competitive threat in regards to AI specific in 26 and 27. This year, no. Last year, no. And then next year, very little. 26, 27, it gets a little more heated in regards to that. And then you're also talking about companies' CapEx budgets likely being on the lighter side.
Which was, obviously a beat. Sales up 94% year on year. That is a slowdown from the prior 3 quarters, which have just been astounding. And 94% up year over year is amazing, obviously. But what's your take?
I mean, let's say at the start, it's down a little bit today because expectations were sky high. But this was a blockbuster quarter by Nvidia, right? What's clear to me now, and what I think the biggest takeaway from the call, is that the world runs on Nvidia. As Jensen said, AI is in full swing. He said this is a multi-year event. This is not just about training AI. This is about moving all the world's x86 architecture. All the applications that run on CPUs are going to be rebuilt over the course of the next 3 or 4 years on GPUs that are running machine learning. So I think that the market is going to have to digest. This just isn't about training clusters in 2025. This is about GPU data centers that are going to be built in 26, in 27. And so for us, our numbers came up. You saw that I think 10 sell-side analysts took up their price targets for the stock. We were buying it pre-market when it was down.
Oh, you're buying it this morning?
Yeah. So, I think it was a blockbuster report. And I think, it's clear to me that...
I told you they wanted to buy it. I told you.
Intels of the world are going to continue to lose share, and the Nvidias of the world are going to continue to gain share. And if you want to bet on the tailwinds associated with AI, you have to have Nvidia in your portfolio.
Okay, so it's now your number 2 position.
Correct.
With buying a little bit more this morning. Josh, what was your take on the quarter? You obviously well known for being in this stock for a very long period of time.
I think they were very artful in the way they maintained everyone's enthusiasm for the potential for Blackwell, where orders stand, the fact that demand is still outstripping supply, but they didn't ratchet up the excitement too much to put them into a position where they just can't win the next time they report. And that's really going to be the company's job going forward. It is already the largest market cap company in the world. It is already the most must-own stock in the world. There is no need to continue to put pressure on themselves to outperform and outperform and outperform. So it's harder than it sounds because they do have a really bright future. And the revolution is real. And the dominance of GPUs and data centers going forward is undeniable. And their market share position within that revolution is also undeniable. So they have to now do this quarter after quarter, give people realistic guidance, execute, ship products, hit those numbers, but not paint themselves into a corner that they can't escape from, where the market expects them to double revenue every year, which, of course, like mathematically will be impossible. So far, so good. I think Jensen understands the mission. I think he's accepted the mission. And I liked everything I heard last night The most important thing, and I'd love to hear Brad react to this, is this idea of the moat. Because competitors are coming in with new solutions. Amazon is ramping up production of their own Trainium 2 chips. Like, they will not have the whole markets themselves forever, but they can maintain dominance, and it might actually be a good thing for the ecosystem for there to be more products out there. I think that's the tone that was set last night, and I think other NVIDIA longs heard the same thing that I heard.
What do you think? I mean, that's all about the idea of the installed base. And we've heard Jensen talk about that before, almost in the same way. And I think I've mentioned this in the past, of thinking about that in the same regard as we do Apple with its own sort of powerful installed base.
Yeah, I mean, listen, the stock started the year at $49 a share, $50 a share. Today we're at 145 or something. The asymmetry is closed, and part of the reason for that is everybody had this wall of worry, right? Custom ASICs, Amazon's going to have their own Trainium chip. I said on our recent BG2 podcast, of course they're going to use Trainium. It's a cheaper price solution for certain customers, but they also, Jassy has said he's going to buy as much Nvidia as he can get his hands on for as far as the eye can see. They know the world runs on Nvidia. So, listen, when we look at our price target for Nvidia next year, it's up 30%, not up 100% like it was at the start of 2023 or at the start of 2024. So when you ask me as a portfolio manager, we took down the size of our position. It was a really outlier position for us to start the year. It was a normal sized position for us coming into this quarter, and we're adding a little on the pullback in this quarter, but we think it's going to be a great compounder and a great bet on not only AI, but also on the replacement, the move from x86 to GPU-based data centers for the next several years.
Okay, Bryn, what about you? You've been a holder of this stock for a long time, too.
Yeah, I mean, I think what's so amazing, and you talked about this moat, and what this means for the AMDs of the world, et cetera, is Jensen walked through how 64 Blackwell GPUs can run GPT-3 compared to 256 H200s. So they're even making chips, the Blackwell, it's not a chip, they're making these GPUs that are cannibalizing their own products. And this is why they are so hard to compete with, is they just continue to innovate so quickly. And then when he talks about how Oracle is announced this Zetascale, whatever that is, AI cloud cluster, that can handle over 130,000, Blackwell GPUs. And so I think when Brad talks about this shift going from modernizing from CPUs to GPUs, I don't think we are really great about understanding. Jensen thinks it's $1 trillion over the next 10 years. I mean, the difference between a billion and a trillion, a billion seconds is 32 years. A trillion seconds is 32,000 years. I think we're still early in this, and this moat is going to last for a very long time. But I do think there are going to be big winners and big losers. And right now, Nvidia is the winner of the bunch.
And Liz, I mean, obviously the market's still trying to digest it. If there was any bit of, I don't even want to use the word disappointment. I mean, there's just so much to live up to. As we said, we had 11 or 12 price target increases on the name. I only see one firm talking about their guidance being below what they would suggest is the bull case. I mean, as you watch the market here react to it, what do you think?
Well, I think the most important points that have been made so far are that expectations were so high. Brad said that at the beginning of the show. And then Josh about making sure that they can set realistic expectations going forward. This market is hard to impress on stock price action. I mean, we're talking about situations where you've got beats and raises being punished in the stock price. So first of all, I think we're still in the infancy of this AI theme. We're going to be in the infancy of it for a little while yet. But as it matures, what we're going to find out is whether or not the companies that have been the winners so far can continue to win along that vein. And then who are the other ones that will come in, and even the other industry groups that will come in. And something that's been really interesting to me in the last month or so is just the performance of software. And I think some of that has to do with the fact that, okay, we've established that this thesis will continue going forward with AI. What else can companies start to spend on? Where can they actually find the profit? And who are the companies that are going to help them create that profit? And I think software is a big group that's going to benefit from that going forward.
So, yeah, I just don't have a lot to add there, to be honest, in regards to NVIDIA. I think I said everything that needs to be said really in regards to kind of my views on NVIDIA. Short term good, Medium term questionable, long term good. All right, next one up here. Brad Gerstner sells Ubity Booba.
Because of how bullish you've been on Uber.
Yeah.
You sold it.
Listen, let me say at the start, Dara has been an incredible CEO at Uber. He's dramatically increased the free cash flow. He's increased the competitive, position of that company. They're the dominant leader now in global mobility. We love the company, and it's inexpensive. However, leading up to the election, right, we have been taking down our position size and we've been rotating into Tesla. Why? Because I said before, we had a ChatGPT moment around full self-driving in 2024. I think the year of 2025 is going to be about robotaxi. We were present at the robotaxi day. We were impressed by the robotaxi. And so for Uber, they have to get past this moment, right, where, they have a hugely disruptive force coming in the case of Tesla. And now we know that the Trump administration is going to push, right, for a national regulatory change so that will be good for Waymo and good for Tesla. Now, Uber has a solution to this, right? They have Waymos on their platform, but we just want to see it play out. We want to see a few more months of this playing out. So, again, it comes back to portfolio management. For us, the optics, right? And certainly right after the election, we bought more Tesla and we rotated out of our remaining Uber because we think the optics are going to be really tough for Uber over the course of the next few months. And they're going to be really good for Tesla as we get closer and closer to the launch of robotaxi, which we think will be Q2 of next year.
This feels to me like, the goal.
So, one, I agree with him, one, I disagree with him. One, I definitely agree that as far as Uber, like the optics are tough short term. Yeah, because everybody's worried about autonomous vehicles and what's going to happen there, right? And how is it going to disrupt Uber's business model, even though Uber can still make money, probably even more money off of that than what they currently make, right? But there's no doubt there's going to be just a lot of question marks around that in the short term. And those aren't going away. Like, those are still going to be here in likely 3, 6, 9, 12 months from now, right? The thing I kind of disagree with is this notion that, autonomous vehicles are going to take off like crazy. It's going to be a build out over like a 10-year span, man. And it's such small numbers as far as right now, right? We have a few autonomous vehicles in Vegas here. It's not very many. Tesla still isn't even done with their software in terms of getting it perfect. As a Tesla driver, I can tell you it's not good enough yet. So we still got to get over that hurdle, and let's hope we finish this baby off in 2025, but it's no guarantee. So like maybe we push out to 2026, but once again, as somebody that experiences the technology when I drive a Tesla and I put it where the car can drive me, it's not perfect. It's not good enough yet to not have somebody in that driver's seat. And so to just be betting that, for sure it's going to be done in 2025, you can bet that, but it's just, you're going to be lucky if you get right, you get that correct, essentially, right? And as a Tesla shareholder, I'd love if Tesla gets that right in 2025, and I hope they do. But to bank on that and then think they're going to go from getting the technology perfected to then get it launched in all these different markets and everything, like, whew, that's some real hopium in regards to that, right? I got to calm everybody down in regards to that. So this can definitely play out over the next 3, 5, 7 years, but don't get excited over the next 12 months about it. I can tell you that. Next 12 months, let's just hope we at least get to a point where the tech's good enough, because it's not there yet.
It's moved.
Yeah.
Musk's proximity to power, that dynamic has changed. He is becoming quite obvious, a very influential voice in some of the policies that are going to happen, whether they are beneficial to him personally or beneficial to his companies, plural, because I think you could make that argument. That's what this strikes me as, is the goalposts moving in some respects to favor Tesla and in some respects hurt the competitors.
No, I would disagree with that. I think the
regulations that we said of ending the EV tax credits, easing the self-driving regulations, those are undeniable.
But if they change the regulations, but FSD wasn't killing it the way 12.5 is and the way FSD 13 is going, where you have 1,000x improvement in full self-driving safety in 1 year.
Dude, Brad Gerstner, no disrespect, calm down, dude. As somebody that experiences tech day in, day out, I can tell you we still got a ways to go here. We still got to finish off this baby. And the way this man talks, he makes it sound like, it gives almost like a false assumption, especially if you don't drive a Tesla and you don't experience the full self-driving. Like, you would get the impression that, like, this is done. Like, we're ready to rock and roll, baby. No. We still got to finish this baby off. Like, dude, chill. Like, we still got to finish this baby off.
Versus the 10% per year we were killing it, the way 12.5 is and the way FSD 13 is going, where you have 1,000x improvement in full self-driving safety in 1 year alone versus the 10% per year we were getting up until 2020, because we've gone from these deterministic models to these imitation learning models. It's about the performance at Tesla that is driving us. Now, sure, I think national regulation makes sense. In a country of interstate commerce, does it make sense that one state's going to allow me to drive my Tesla on full self-driving mode, then I get to the state intersection between Texas and Oklahoma, and I no longer can use full self-driving? I have to stop the car and change the mode of driving? That doesn't make any sense, right? We drive cars across state borders, so having a national regulatory framework, not just for Tesla, for everybody, for GM, for Waymo, for everybody, that's just the right policy. I don't think it's about favoring Musk or his companies, though I think regulatory clarity is needed in this country. But I look at it, it's the improvements that are going on in Tesla. And I think, 18 months ago, nobody would have said that this was winner take all or winner take most. They would have said everybody's going to have full self-driving capabilities. I will tell you right now, Tesla is running away with their full self-driving capabilities. The only other game in town really is Waymo.
So, Josh, I want your take on this, because Uber's a large position for you. And, I don't recall you being as bullish on the Tesla FSD event as Brad certainly seems to have been. What's your take on him selling the stock here? I was just shocked, to be honest with you, when I heard about that move.
Brad's made a lot of money in the stock, and I completely understand his point. We're right now in this kind of gray area moment where it's unclear how the onset of AVs is actually going to play out. I want to say Silicon Valley is probably one of the greatest resources, natural resources, I would call it, we have in America. The people who live there, the people who risk capital, the people who invent things there have just done incredible things for this country. But as a East Coaster, as a Wall Streeter, I also want to point out the blind spot. They very oftentimes think that things are going to happen tomorrow that may not happen for 10 years. They have to think that way.
This is top tier point. Like, this is good right here. I like this. He's 100% on the ball. Great work, JB.
I want to say Silicon Valley is probably one of the greatest resources, natural resources, I would call it, we have in America. The people who live there, the people who risk capital, the people who invent things there have just done incredible things for this country. But as a East Coaster, as a Wall Streeter, I also want to point out the blind spot. They very oftentimes think that things are going to happen tomorrow that may not happen for 10 years. Yep. They have to think that way. Yep. It's endemic to the species. And thank God somebody does. Yep. Here in New York, we think more immediate. We think more cash flows. We don't think so much about what's going to change. We think about what's not going to change. And that's a little bit more of a New York mentality. And I will tell you what won't change. Most internet marketplaces are demand aggregators. That's how you win.
One side is like insanely crazy optimistic and just like everything's going to go perfect and we're just going to like, and the other side's much more, let's call it on the pessimistic side.
In my view, the way this will all play out, Tesla's autonomous vehicles and cabs will be phenomenally successful, as will Waymo's, as will probably 2 or 3 other large-scale providers, because there are apps that will aggregate demand between all of them. I find it very hard to believe that you're going to have 10,000 Tesla full self-driving cabs on the street, and that's going to upend a company that has over 100 million users on their platform. The more likely scenario from where I sit, and again, I could be wrong too, the more likely scenario is that Uber is going to aggregate demand amongst all of the various players that have different types of autonomous vehicles on the road.
And then take
the consumer is going to want one-stop shopping, not, hey, this time I want a two-door. That time I want maybe a moped. This app I'll go to because I want this. I don't think it's going to play out that way, and I think Uber is going to be the central demand aggregator, and that's the bet that I'm willing to make. Now, the stock might be volatile, and Brad.
And I likely agree with JB in regards to this. Yeah, that's likely how I see this game playing out over the next decade.
Look right in the short term as Elon consolidates power and convinces Trump to push for things that benefit FSD. I won't deny that. The thing is, I'm willing to sit through it because I think the bigger story here has yet to play out.
Yeah, real quickly, Josh, I love the way Josh framed that. I think it's brilliant framing. To be clear, we were the biggest defenders of this stock from $15 to $80. We sold the stock much higher than the stock is at today, right? And I reserve the right. I may be buying this stock tomorrow or in a month or in 2 months. I just thought that the optics were going to be really challenging as we move into the launch of robotaxi, which I think will occur next year. And this is not about regulatory capture. This is about the full self-driving capabilities, about FSD 13 at Tesla. Without that, there would be no investment going on in Tesla. People are excited about what they see with Optimus, what they see with full self-driving, what they see with the inexpensive cars they're putting on the road.
You know, it's interesting, right? You kind of almost want to be a duct tape banana sells for $6.2 million. Oh my gosh. People have too much money. That's all I got to say. Sometimes you almost need to have your personality a little bit between kind of what JB was talking about there, the super optimistic, and then a little bit of that realism, pessimism, maybe, like he talks about that kind of like East Coast mentality a little bit, right? So you can kind of keep yourself a little balanced because, one side sometimes thinks like everything's going to happen. And these things take a long time. Like Jensen was talking about AI and GPUs and how everything was going to change. Dude, he was talking about this subject, 14 years ago. 14 years ago, Jensen was talking about this sort of stuff, right? I'm talking about Nvidia CEO. And it actually became a massive, big, huge thing really in the past few years, right? So a lot of times this stuff just takes a while, like, autonomous vehicles being everywhere and that, like, 10 years out, I think it's going to be massive. I think it's going to be, you're going to see cars all over the place that, it's going to be very commonplace. We'll be like, oh, it's no big deal. Yeah, this car not driving anywhere. It's not like today where, like, if you saw that, you'd be like, whoa, what the heck? There's no driver in there and somebody's going in that car, right? But it takes a while to get there. It's not just like overnight and everybody's doing it. And this notion, to stick up for Uber for a minute once again, and they're just going to be eliminated out of this process. It's not super realistic either. Like these other companies that are going to compete with that are going to have technology, right? They're going to likely want to use an Uber as kind of a middleman. Maybe Tesla doesn't and they just go all Tesla app, but that will limit Tesla's reach, right? Because not everybody's going to know like, Tesla has this app and you can order a ride from it. Like a lot of people just won't know that, right? And so if imagine and remember how Tesla wants to go about this. It's not like Tesla's just going to make a massive amount of vehicles and put them on the market because would just cost ridiculous sums of money. It's an unrealistic financial expectation for the company to do that. So what the company's likely going to do is they're going to have everybody that owns a Tesla be able to put their cars out there, right, and on the market. And so if you're somebody that owns a Tesla and you want to do that, would you want to limit yourself to just being on, let's say, some sort of Tesla ride-sharing app? Or would you want to be on the Tesla ride-sharing app and available on Uber or even Lyft if people use Lyft, right? Like you'd want to be as many places as you possibly can. It's no different than saying you're going to list your home for sale. Would you rather just list your home on Zillow and that's it, or just put it on the MLS in general so it's everywhere in case somebody comes across it, right? You'd rather put it everywhere so you're going to get a higher probability of selling your home or renting and those sorts of things, right? So it's just something to keep in mind there. But as a Tesla shareholder and somebody that doesn't own Uber stock right now, like obviously I would love it if just everybody use the Tesla app and they just can get a ride from that. Like that'd be amazing, right? But that's also not the most realistic, probable scenario. So there's something we got to consider there, okay? All right, guys. Appreciate you joining me as always. Thanks so much for being here. Once again, Black Friday sale coming up November 29th for 1000xstocks.com. That'll be for full access. If you are looking to get in for that deal, click the pinned comment down there. fill out your name, email, and once again, you might want to put in your phone number as well if you want to receive the deal via text, because on Black Friday, every company that's got your email address, you're going to get a massive amount of just ridiculous emails from every company out there. So you might miss a deal, and then when it's gone, it's gone. It's a one-day sale only, okay? All right, guys, much love, and have a great day.